Everyone, myself Vaibhav. In today's session, we are seeing USDJPY hovering just below the 109 level and looking at its price formation since the release of non-farm payroll data. I think the bears are ready to take charge, and we are likely to see these bearishness persist for most part of this week. So, in this session of market movers, we will be looking at some of the crucial levels which we can utilize if we want to trade in the USD If we consider the equity segment, we have most of the equity indices around the world, major equity indices including the DAX and of course the three key equity indices for the US trading closer to the record highs. NASDAQ is a couple of percentage points below the record highs, but the S&P 500 and the Dow Jones Industrial Average are trading on the record highs, and if we see some gains, even modest gains of say 0.1% in today's session. This close will be again a new high. So this is the current situation where we have this continuation of the bullishness in equity market, and I think the situation is not really likely to change anytime soon, and more and more market participants are now believing means it's been quite a while now, but even after this drop in the non-farm payroll data, we are seeing bullishness in the equity segment continuing. And one theme is that the Fed is not really likely to act anytime soon, and that has been the fuel for the equity run. If we consider the data rocket for the day, there were not many major releases in the Asian session and also for the European session. For the US session, we have these minor releases. One is ISM New York Index, which tries to look at the business activity in New York region, and some gains are expected for the month of April as we have most part of the economy is opening up, and many of these are going to generate the business opportunities, employment opportunities, and that is going to have the positive rub-off effect. And later on, we also scheduled to get the consumer inflation expectations. And here also, we are likely to see slight uptick, not much change, but still the reading is likely to go up to 3.3% compared to the prior release of 3.2%. And later in the day, we also have Mr. Biden, the President of the United States, speaking on the state of economy for US. And after this enactment of stimulus measures, since he has taken charge in the month of January, we have seen the equity markets continuing to form new highs, and given the expansionary fiscal measures, I think the underlying theme is not likely to change anytime soon, and it will be interesting to see how he reacts to the lower than expected non-farm payroll data. So that will be one thing to watch out for. Now let's shift our attention to the technical aspects. First, we will consider the USDJPY, and then we will also see if there are any trading opportunities in the equity segment. And for the day, the equity index of NASDAQ is the instrument of choice for us. So let's start with the USDJPY. This is the daily time frame chart, and here last couple of days were spent in consolidation where the upside was kept around 109.5, and after the non-farm payroll data, as I said earlier, also we have more reasons to believe in the bears taking back charge and pushing the USDJPY lower. And I think in that scenario, even this prior swing low can be expected to be retested. We have this swing low just little above, or I think just closer to 107.5. I'm not precise here, and that looks likely to be retested again. We will be having this formation of lower highs, and the implication is that we might see a formation of a new swing low on the lower side, but that is likely to take a couple of days. So even if you are looking from the purely intraday perspective, I think if you don't really want to wait till that long, even in such a scenario, it will be prudent for us to continue to trade with the trend, and all we need to do is look for some optimum levels where we can capitalize on our trade setup. So if we consider the formation on the lower time frame chart, we have this central pivot point in play around 19.20, and I think that is one key technical marker to watch out for. If we see the price formation so far in the day, we had this brief move above 109, but it didn't really sustain, and we saw again this selling pressure building up, pushing the USDJPY lower below 108.7. And now, as the US session has got underway, I think this theme is likely to repeat, and we can, in the near term, keep the stop loss just little above this central pivot point. And as the price action is now in the lower band of this regression curve, I think if these technical levels hold, we are likely to see the flattening of this curve, and in due course of time, we can expect the move towards first support of this month's pivot point series. So that probability is going to get only strong if we see today's close happening below this central pivot point. And if we want to trade in this session, I think the price moves anywhere in the vicinity of 9 are going to be the price area of optimum opportunities where we can keep our stop losses fairly sharp while trying to maximize the profit potential. So if we have to look for trading opportunities, I would say that confluence area of 50, 100 and 200 SMAs, which are converging closer to 109, is going to hold the key in near term. And here the things look a lot more clearer. As I said, this immediate swing high, the high formed during these volatile moves in the aftermath of non-farm payroll release. I think that high can be utilized as a near-term resistance area and a level to use as a stop loss unless and until we have any sustained move beyond this swing high. I think the near term trajectory is going to remain bearish, and if we consider these three key SMAs, this can be utilized as the resistance area. The convergence of these three SMA is going to create strong a strong sentiment on the bearish side, and as we are seeing some upward momentum after the start of US session. If we see these sustain and get the USDJPY closer to this convergence area, and after that we will need couple of hours of consolidation first, and as and when we see some momentum taking hold on the bearish side, that will be the opportunity to look for initiation of the sell trade. So this is the price area to watch out for, and a retest of this immediate swing low, and in due course of time, even beyond those levels, the USD can decline. And as I said, in medium term, I am looking at the possibility of USD declining towards 107.5. And even if we don't really want to wait till that, I think the risk reward ratio of 1:2 is good enough to trade, and for a risk of around 20-25 pips, you can expect to make at least 50 pips if you happen to be right, though the probability looks quite good that USDJPY might decline much further. But in the market, nothing is ever certain, and anything and everything can go wrong. So we have to be mindful of that proposition also. Now let's see what's happening in the NASDAQ. This is the daily time frame chart, and we had this correction starting closer to 14,000 level for the Nasdaq, which had pushed the Nasdaq lower towards 13,400, and after that we had this retracement. But after retracement and consolidation closer to the 13,700, we are again seeing selling momentum emerge in the NASDAQ, and as a result of that, we have to be a bit cautious and see if the NASDAQ is its turning course, and if it is likely to go back toward this immediate swing low or even further than that. So for trading opportunities, we will mostly have to rely on the lower time frame charting. Here we have the central pivot point just below 13,700 price area, and in this session we have seen the Nasdaq hold below this central pivot point, which is the marker of prevalent bearishness in the Nasdaq, and I think if it holds, we can even expect the Nasdaq to move lower towards 13,500 or even beyond that. There's a retest of the immediate swing lows can't be ruled out, and the first support is going to come into play around 13,300. So here we do have the good probability of the bearishness prevailing in the Nasdaq. So in this session, the opportunity will be there for shorting closer to the 13,600 price area if we have the Nasdaq continuing to hold on the lower side, and in near term the stop loss is going to be kept fairly sharp. We have this another technical factor which is also pointing south, and if we have the break below this convergence of 50 and 100 SMA, then I think the immediate swing high established closer to this 200 SMA can be utilized as a possible stop loss. But before we go on to initiate the trade, we will need the Nasdaq to give us a clear-cut breakout below this immediate swing low, which is closer to 13,600, and it should sustain at least for a couple of hours, and then only we will have more and more reason to believe in the possibility of Nasdaq moving back towards its lows established closer to 13,400, and the trading opportunity for us. So this is the technical formation, and looking at that, I feel the bearish trade, the short sell trade, is likely to prove much more profitable than looking to trade in against the trend. So here, watch out for the consolidation closer to this convergence area, and depending on the breakout, you can try to look to initiate the trade in the Nasdaq. And before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Thank you all for joining in. Have a fabulous day ahead. Do subscribe to the Decoscope webinar channel. See you next time. Till then, goodbye.